G'day everyone and welcome to this due diligence webinar as we take a deep dive into lake resources. Now at the moment there's a sense of urgency. You can see it in the headlines as a push for climate action has seen electric vehicles lead the charge. And there isn't a day go by at the moment without a headline from one of the car manufacturers, Ford or BMW, as they transition their business models away from petrol engines and follow in the footsteps of Tesla, which became a $1 trillion company overnight. Now, the threat of a successful energy transition will be a failure to develop the necessary battery materials. And lithium is the front and center of that transition, with demand forecasts suggesting 10 times growth needed for 2030, 30 times growth needed for 2040, and lithium prices doubling over last year. It's clear that the lithium market is far from being balanced. Now, Lake aims to become a major global producer of high-quality battery-grade lithium carbonate, and it has the market's attention at the moment. The stock has a market cap of $1 billion after rising 50% last week on what looked to be significant institutional buying via UBS. Now, our research business, Corporate Connect, wrote research on the company back in March 21 when the share price was 23 cents. We had a 73-cent price target, and we upgraded that to $1.04 in September. Now, the format for today, we'll break this presentation up into 4 segments. The first part, we'll be talking about the lithium and the extraction process and the ESG benefits. Second part, we'll be talking about the project, Lilac Solutions, and the Kachi Project specifically. We'll then talk about project financing. And then finally, we'll talk about the timeline and other projects that Lake has within its grasp. Now, don't forget to ask questions relative to the segments that we've introduced. We've got a sophisticated audience on board, so don't be afraid to be too technical. This event, of course, is CPD accredited for advisors and brokers. We welcome today the Managing Director of Lake Resources, Steve Promnitz. Steve, over to you. Thank you. Just need to turn on his camera. Here he comes. Thank you.
Thank you very much for joining, and thank you to Share Cafe and Corporate Connect for organising the event. I do appreciate your interest. This has been a long road now, over 6 years, and it now seems that we're in the right place at the right time. As Tim mentioned, there is significant demand for lithium, but not all lithium is created equal. We have been down a road now for more than 3 years to try and produce a product which is consistently high quality and scalable, because we know that's what the battery market wants, and to produce something with key ESG benefits, which we know that the electric vehicle makers want. This presentation, or a version of it, is available on our website. I've added a couple of slides here. I will be making a forward-looking statements on the following slide. And so please read the disclaimer at your leisure when available on our website. But without further ado, we'll move to slide 3, our summary slide. So first of all, where are we located? We are very specifically located in the Lithium Triangle because these projects are large, they're scalable, and they're generally low cost. All of the major producers here are here. We have a very large property package, over 2,200 square kilometres or 500,000 acres, and that's over 4 different projects. I'm going to be spending my time talking about the Kachi Project today, which is down the road from FMC, now called Livent. They've been operating for the longest time, since 1997. But the real key thing is, once we get this project going, we can then start talking about the next projects. Next slide, please. But as I mentioned, our key focus is slightly different to other companies in the lithium sector. We specifically went down the path of trying to produce a consistent, very high purity lithium product. And the reason for that is that lithium, unlike some of the other commodities around, is still not openly and transparently traded through the LME. And so price discovery is always a little more tricky. Given that, you have to sit in the pocket of your end user, your cathode maker, your battery maker, and 2 or 1. If we go back about 3.5 years ago, they just said, we need to get a consistent high quality product. Now, the benefit that brings is that you can avoid battery performance issues. We just have seen the possibility of that with the recent GM Chevy Bolt recall. That was down the battery level. We don't know if it was actually in the cathode, but if you can produce high quality inputs, you can ameliorate issues and deliver high battery performance. So that's what we're about. However, to do that from a lithium brine, we couldn't use the traditional method. You had to do something different. Doing the same thing and expecting a different result was just not going to cut it. So 3.5 years ago, we looked at about 13 different methods of extraction, and we've settled partnering with Lilac because they use a very common method in water treatment called ion exchange. And all they had done was adapt ion exchange for the removal of lithium. Supported by the tech sector, supported by battery EV makers, and now joint venturing with us, partnering right down into our project level. And one of the key benefits from delivering this high quality product using a cleaner technology is that we get major ESG benefits. And I'm not talking greenwashing here. I'm talking orders of magnitude lower water usage, orders of magnitude lower impact on the land surface, a low carbon footprint. All brine projects are relatively low, but we go even smaller because we're going to be using renewable solar energy. And we're on a clear pathway now to production. We've been running a pilot plant in California now for nearly 1.5 years. The project itself is large and scalable. It's high margin because of that quality product. We've got indicative debt funding in place, up to 70% of total finance. That's unusual. We've got most of the equity in place. This project is ready to go. Next slide, please. So, given that, let's actually have a look at the process and let's have a look at the ESG. Let's do a deeper dive on these two things. And these are the two areas that investors regularly ask about: Lilac's ion exchange direct lithium extraction method and the real meaning of the ESG benefits. Next slide, please. Now, first of all, the process. Here in the top right-hand corner is the schematic, which tries to summarize how the traditional evaporation process works. Now, this was a process that was developed in Greek, Egyptian, and Roman times, and it's essentially the same today. You evaporate water away, you concentrate salts, and then you separate out the lithium. So if we were producing table salt, you could produce it like this. The difference is you want to separate out the lithium from all the other salts. Then you produce lithium chloride that goes into a plant to produce lithium carbonate. All we do with our process is not change this flow sheet, just replace the evaporation ponds and just take the lithium out of the brine. So underneath the surface, whether it's 25 meters down or 400 meters down, we've got a brine, a salty water, which is about 8 to 10 times the salinity of seawater. And in it is dissolved a little bit less than 1% of the total volume is dissolved lithium. So all we do is just take that 1% of lithium out. And because we're using ion exchange, we can actually return all of that liquid back to its source. And so the immediate benefit is low water usage. And the immediate benefit is you produce a very high quality product because you're just taking the lithium out. These ion exchange beads, if we were removing zinc or if we're removing lead, perhaps selenium in a water treatment process, 70 to 80% of the uranium is produced using ion exchange. Each time a bead is just designed just to take out that metal you want, in this case lithium, and then that bead lasts a long time. That's it. So not new technology, just new for the lithium space. Faster, high purity process, high purity product. You get a high recovery. We recover 80 to 95% of the lithium instead of 45, 50% using traditional methods. It's cost competitive because you produce that lithium chloride in a single step. We strip the beads with HCl, and so we create lithium chloride, which goes into the plant, plus water, acids neutralized, create lithium chloride, beads are ready to be used again. And then we just run that process again and again and again, every 2.5, 3 hours, 24/7, processing water, producing lithium chloride for the back end of the plant. It's really not that new, just new for lithium. Next slide, please. So its ESG credentials are really quite impressive. In traditional methods, all the brine is evaporated. Here, we return virtually all back to its source. Now, what that means is over time, as you're reducing the brine, this isn't potable water, the scarce amount of fresh water that's available, which floats on top, is then not available for local communities or farmers. And so there can be social issues. This avoids it. Next slide. And in that process, because instead of having a footprint which heads out across the horizon, covers 20 to 30 square kilometers of evaporation ponds for a project our size, we're talking about something the size of a city block. So significantly smaller physical footprint. Next slide, please. And then from a carbon perspective, all of the brine projects are relatively low carbon. There's nothing wrong with hard rock production. It's just that when that hard rock spodumene is sent normally to East China, it has to get converted into lithium hydroxide at about 950 degrees centigrade. That involves a lot of energy, and most of that is from coal at the moment. So it's got a much larger carbon footprint. Although the brine projects are generally lower carbon, we aim to halve that footprint even further by the use of hybrid solar power. Next slide, please. And so to that end, if you look here at this graph, we try to show a graph of the carbon footprint per kilo of lithium product from hard rock, and then from evaporation in green, and from direct lithium extraction. We aim to deliver on a number of sustainable development goals here, and I think we're well underway to do so.
Steve, perhaps a couple of questions now, if you don't mind.
Go ahead.
Now you can travel. Is there any plans to travel overseas to Kachi?
I will be departing on the 10th of November. The borders open into the US on the 8th of November. I'm catching up with our bankers in the UK first to update them, Lilac in California, and then into Argentina to host site visits.
And given you've been in this industry now for 6 years, what sort of, how significant are the ESG changes that you've seen, and what has that meant for your discussions in terms of funding and fund managers and the like?
If we go back 15 months ago, most people just gave me an eye roll when I talked about ESG. And essentially it was like, why do you bang on about this? Why are you even using a new method? Just stick with something that's traditional. But we could see that the end user wanted a higher quality product. We couldn't do that using the traditional method. And interestingly, since the European Union started providing incentives to the space from about September last year, and then particularly when they changed legislation in December last year, this is now a financial penalty to those electric vehicle makers if they can't deliver a low carbon footprint. And this just isn't in lithium. This is all the products that goes into batteries, all the products that goes in electric vehicles, and then how they recycle everything afterwards, including the battery. So the sum of the parts is actually very important, and anything they can do to improve it really makes a difference. We are very close to releasing very detailed information on the total water usage, the total water returned, the total amount of processed water used, total amount of energy, total amount of renewable energy, total amount of waste, and set that out in a table together with our sustainability report so that we can demonstrate with clear and tangible evidence that this is a significant change. And I have to say, in our conversations with electric vehicle makers in the last, I would say 4 months, now you can't even have a discussion really with their procurement department until you've gone through their ESG department and got that box ticked. So it's meaningful, and I think we're going to see more and more of this.
Steve, I'll let you continue with your presentation now and discuss the project in particular.
Okay, next slide, please. So let's specifically look at the project, the scale of the project and our expansion, together with Lilac's earn-in process and what that really means for our project. Next slide, please. You saw the technology with Lilac. We've been working with them now for more than 3 years on a partnership, but as debt funding was advancing, we need to have a fuller document to withstand the whole process of project finance. This calendar year, equity markets have opened. We were able to source some debt, quite fortunately, but still conversations were around the technology. Would it work? Would it work at scale? If it works at scale, will it continue to produce the same quality product? So to that end, although we're confident and Lilac is confident, we formulated this partnership whereby they progressively earn into our flagship project, Kachi, by demonstrating to the market, particularly the equity markets, not only is their process works, but it works at scale with that consistent quality. They are self-funding the demonstration plant now at Kachi. They need to deliver at minimum 2.5 tons of lithium carbonate, and that has to be very high quality. And as you've seen, we're expecting 99.95% or more, and we may be able to tweak that process up to 4 nines. And then once you do that, you've got to take that project and get it through the qualification process with battery makers. We're talking to tier 1 battery makers and cathode makers at the moment. The qualification process takes a minimum of 6 up to 12 months. And by doing that, when we start production, we've already met those qualification standards. So we get that premium pricing based on battery quality from day one, rather than going through that after production. All of that is valuable to us and to Lake shareholders and to the project as well. And by having Lilac actually earn into Kachi, they're essentially putting their money where their mouth is and de-risking the concern that investors have around the technology. When they've done that, they'll contribute their 40, 50 million US, whatever is the pro rata amount at an equity level. But best of all, what we do is we align that money from the tech space for the very first time into upstream lithium with genuine ESG benefits. And the backing that Lilac has is really significant. And in this process, we create an independent producer. In the past, you would have to hand over a quarter or half your project to somebody in the supply chain. Here, we actually get a de-risking methodology and funding and really deliver a project that once this is going, we can scale it up further. Next slide, please. Lilac has just completed a US 150 million investment round. Indicatively, about a third of that is tagged for this project, but their backers are significant. The Bill Gates-led Breakthrough Energy Fund, the Lowercase Capital, which was the most successful venture fund ever in Silicon Valley, 250 times return by getting in early into Uber, Twitter, Instagram. Recently, Chris Sucker has set up a new fund called Lower Carbon Capital in August. This is one of his first investments. MIT, Massachusetts Institute of Technology, regularly review projects and technologies. They put their money into this through the Engine Fund and have gone again. Recently, we have the investment from BMW, Sumitomo, SK out of South Korea. That's the sort of third-party validation you want for a technology, and that's essentially flowing through into our project. Next slide, please. So why are they so keen, and why are we happy to have them? Because it de-risks a project, and this project, because of its size, we can then scale it up to suit. We've only drilled 15 holes, and yet we have a resource here which only 20% of it can support 25 years of production at 25,000 tons per annum production. So it's a significant project. You can see, just like any other salt lake here in this photo, it's it rains once every year, once every 5 years, hyper arid, no grass, no trees, and underneath that surface is a lithium bearing brine. Next slide, please. But the key difference here is that we basically control the whole basin, or certainly the part that's important, which is the lower section. And we've got leases here covering 74,000 hectares. To put that in context, that's the size of New York City, 11 times Manhattan Island. That's a third of the Sydney Basin, if we include all of Greater Sydney. So we're talking a major footprint, and we control that. We've got the rigs back here at the moment to upgrade the resource for reserve status and also to expand it as part of the expansion case. Next slide, please. This is what the plant will look like when it's built. On the right-hand side, you see letter A. That's the single shed or warehouse which hosts these 50 or 60 modules which are running the ion exchange. That's what replaces the 30 square kilometers of evaporation ponds. Everything else is pretty much the same, except for letter F, a chlor-alkali plant. We're going to be producing our reagents on site, and off screen is the solar PV farm. Next slide, please. And we're on a clear pathway, not just to production, but also to an expansion. Our pre-feasibility study was focused on 25,000 tons per annum. But given the size of demand, we can scale up to 50,000 tonnes per annum, and we expect to have this expansion study coming out at about the same time as our DFS, and essentially being a phase 2 of that whole definitive feasibility study. And the reason for that is the demand is there. All of the off-takers want everything we produce for the first 5 or 6 years, and now the debt providers are also quite keen to support it. Now that would make Lake one of the top 5 global producers. Next slide, please. And why that's important is if we look at what Tim was talking about on the expansion side, it's gone parabolic. If we just look at last year, it was 151 mega factories planned. Now, at the end of this calendar year, in a couple of months' time, there's going to be 151 operating. Last count, there's 247 scheduled for the end of 2030, and barely a week goes by without more announcements about new EVs or new battery plants. Just last night, we saw Tesla announce 100,000 Teslas going out as hire cars to Hertz in the US and the EU. So there's no end in sight, but what hasn't happened is the money being spent at the upstream end. So back to you, Tim.
Thanks, Steve. A couple of questions here, more than a couple actually. Will Lilac now be testing brines from other lake projects?
So the short answer to that is yes. Our key focus is essentially getting this project up and running. And so we want to show how we can deliver on this project and then scale up this project. But yes, we will be sending brines from our other projects. I'll talk about that later.
And is anyone else extracting lithium from brine, and has there been a prototype built?
So direct lithium extraction is a sort of a grab bag for the process of, instead of using traditional evaporation, you use a process where you extract the lithium from the brine. The best known is Standard Lithium, and I'll talk about them later on. Standard Lithium are a good 9 months ahead of us. They have a different process using adsorption beads, we believe, which involves heat and also washing the beads with water rather than reagents. But they're quite advanced, and they've got a market cap north of $2 billion with 30% of their project. Vulcan is another listed ASX company, which is trialing direct lithium extraction using ion exchange beads. In actual commercial operation, our nearest neighbor, Livent in Catamarca province in Argentina, has been using a hybrid form of direct lithium extraction using adsorption beads for many years. They use evaporation to concentrate the brine first and then run it through a hybrid form of direct lithium extraction. And also in China, in the Qinghai Lake, it's also being used at a commercial scale. I'm not too sure what their production is now, but 18 months ago, they were producing 30,000 tonnes per year of lithium carbonate. So I think we're going to see more and more of that, whether it's using ion exchange, whether it's using adsorption beads, whether it's using solvent extraction, whether it's using nanofiltration. These methods are going to be the way of the future because they produce that high quality product, and you don't leave half your product in the waste. I mean, with pricing at lithium at the moment, if you're only extracting half of it, you're leaving half of your very valuable product in your waste. That's not very efficient.
And is it necessary to have some sort of carbon footprint analysis undertaken as well as part of the process?
That's what we're doing. I mentioned that before. It's not so much that it's the validation process we're going through, and we just needed to optimize exactly how that energy is going to be produced yet. We can't use all solar from day one. So we will be using some gas in that first phase and then phasing that out as we move to predominantly solar going forward.
And your lithium, of course, is in the Novonix battery cell, which has been sent for qualification. Do you have any idea of when you expect to get some results from them again?
We will be releasing some of that in the future. Unfortunately, there was quite a demand for our product, and so we did send it off to a number of sources, but we're going to be producing much more product quite soon. And Novonix actually has a pilot plant there ready to process more of that. What's great about Novonix is that they are a genuine independent third party. They've been doing this for a long time. And so it's much more transparent than when you're dealing with a more traditional battery or cathode maker where we provide them product. And it's there's a little bit of a power imbalance when we're looking at the data.
Steve, I'll hand it back to you now to talk about the PFX and PFS and the project financing.
Thank you so much. On the next slide, please. So just following on from Tim, the pre-feasibility study that we released in April last year and refreshed in March this year demonstrates a very robust project, high cash flow, high margin, long life, high NPV. And through that, we've been able to secure debt finance, and I'll talk about that 70% support from export credit agencies. And we're also in a solid equity position thanks to the conversion recently of options that were in the money. Next slide, please. So let's look at that PFS. What does it actually mean? We're using the lithium carbonate prices that were the norm some months back. This produces an NPV of 1.6 billion US using only 1 million tonne of the resource. Around 550 million capex and producing an annual EBITDA line of 260 million a year. Now, because of our debt financing being long dated and low cost, that free cash flow after the first 12 months approaches 200 million a year. So that is really quite substantial. At an expansion study case, we will be releasing those numbers when they're available, but indicatively, you can easily imagine an EBITDA line well north of $500 million a year, and cash costs should be coming down due to some of the benefits of scale and also the scalability of the solar PV farm. So long story short, very robust PFS. If we put higher lithium prices in this, even more so. Next slide, please. One of the things that is often lost, though, is that people just look at all lithium companies and they may look at lithium pricing and expect they're all going to get the same margin. Not so. When you produce a premium product, you capture that margin yourself. Because if you're producing an industrial grade or a technical grade product, it has to get reprocessed somewhere. And so you're passing that margin to someone else in the supply chain. Here, we can actually capture all of that ourselves. In the last few weeks, we've seen the lithium pricing complex lift from a range of $10,000 to $13,500 a tonne up to $17,000 to $25,000 a tonne. And due to the lack of new supply coming on stream and the fact we haven't signed an offtake agreement, we can actually extract some benefit from that as part of our project moving forward. Next slide, please. Sorry. And as Tim mentioned, we've already demonstrated this product is high purity thanks to the work of Novonix. If you look on the right-hand side, and if you look at what's in it, there's basically nothing apart from lithium, a little bit of calcium, a little bit of sodium. They're relatively easy salts to remove. And Novonix tested it not just in a battery, but also in a nickel-rich battery, and it performed just as well as other tier 1 products. So that was very valuable. Next slide, please. But one thing that we have really benefited from is the project financing. We knew that getting debt for lithium projects was hard. It was quite difficult to source. And also there were investor concerns around the political risk or the potential for issues operating in Argentina. So we went to a number of export credit agencies, and we've been very fortunate that the UK Export Finance Group and also Canada's Export Development Group have both agreed to provide financing. For the UK Export Finance, they want to provide 70% of the project, and Canada will join in with that, providing up to US 100 million. Fairly standard project finance terms. This is subject to completion of the definitive feasibility study, our environmental social impact, and completing an offtake agreement. But we were doing those things anyway. So the key benefit or the key takeaway out of this slide is 10 to 11-year debt, or 8.5 years post commissioning, running out the door, 2/3 fixed at less than 2% interest, and then a third at a floating rate starting from 2%. And they're credit guaranteed. The banks will be joining in. Further, the UK Export Finance has said, given some of the assumptions we've provided for an expansion, they would be keen to finance that as well. Now, what do they get out of this? Each country wants to send some of their equipment, some of their advisory skills, to the project. So that's what will be happening here. And we're very fortunate to have this source of capital because it basically makes this project a goer. Next slide, please. And then on the equity side, thanks to the recent conversion of bonus options, we had 26 million Australian in the bank at the end of June. That is approximately 60 million at the end of October, a little bit more. We'll be coming out with those numbers in a few days' time. But it means that we've, together with the money that LILAC is providing, we've basically already have 2/3 of the equity for this project and virtually all of the debt, as long as we deliver things that we say we're going to deliver. So most of the project is funded. We've got a share price which is now responding favorably as part of that. And so, long story short, a robust project and now a robust financing package. Tim.
Thanks, Steve. I mean, it must be pointed out that your share price traded $1 not long ago. So can you talk to the significance of that direct lending by the UK and Canadian sovereigns? I don't think it should be underestimated. And what needs to happen before that lending is finalised? So
if, let's say we weren't in lithium, let's say we were in copper or, just leave gold aside, copper or maybe some of the base metals, it's always difficult to get debt funding for a startup company because you're not in production. And then when you do get that funding, and in each of those cases, that metal is tradable on the LME, they can then hedge that commodity, but you're still paying for it. It's still usually going out the door at least 12 to 15% interest rates. And then you add on hedging and you add on normally options and equity kickers and what have you. In this case, we're not in production. We don't have a product that is traded transparently on the LME, yet we've been able to secure 11-year debt, 2/3 of which is fixed under 2% interest. So that makes the project robust, financeable, and actually improves the cash flows over and above what looks like a robust project anyway. So no, it shouldn't be understated. What we have to do to deliver that, normally, and having worked in project finance myself 20 years ago, normally you've got to jump through a lot of hurdles to get that debt. In this case, we're doing the things that we would do anyway. Definitive feasibility study, we're well underway, and I'll talk to that in our timeline section. Same with our environmental social impact assessment. The export credit agencies are really looking at that. We also need to discuss sourcing of products and sourcing more of our product from Canada and the UK, together with material out of Argentina. And then last of all, securing an offtake agreement, which I can tell you is relatively straightforward at the moment. It's about what that pricing mechanism is going to be, and then subject to quality sign-off.
And securing that sovereign lending must say something about the technology risk in terms of what they perceive there to be little risk here. It's
simply this. Since really the start of this calendar year, I would say, perhaps November, December last year, countries around the world and governments around the world have wanted to be seen to be involved in this energy transition, and this is a case. And here we've got a project which is financially very robust, and often export credit agencies don't get to see those, so they know they're going to get their money back. And then on top of that, they can see the ESG benefits, which, as I shared with you earlier, we're not just talking marginal differences, we're talking a real sea change. And I think, and particularly in the case of the UK and less so with Canada, they see an opportunity then to get in early into this space, which is going to be an evolving and developing space, and then they can ply their wares in other projects going forward and be seen to be doing so.
And so just one question on the corporate structure. Is there any plans to be listed on the NASDAQ?
Yes, there is. And I have flagged that previously. We did have to get our ducks in a row. Getting the indications of the debt finance was important prior to uplisting. Having a very clear and transparent relationship between ourselves and LILAC was also a key part of that. Finishing our audit financials was another key part of that. And then last of all, knowing that we would secure an off-taker either before or soon after uplisting, and we can see a clear path to that. So I'm not absolutely certain on the timing because everybody wants to get uplisted in the US, but indicatively prior to financial close, middle of next year, we aim to do that. And then we can do comparisons with other lithium companies in the US, and also we can get more of the benefit of the tech support, which is interesting here in Australia, but I have to say in the US, they really understand seeing climate tech and clean tech supporting this company and this project.
Thanks, Steve. I'll let you continue.
Thank you. So if we move on to the next slide, please. Let's talk a little bit about our timeline and then some of the catalysts, the news flow, and other projects coming down the pipe. Next slide, please. So first of all, our timeline. We have to do our bread and butter items first. Our definitive feasibility study, our environmental social impact assessment, they're well underway. We had hoped to have those out for March. It's now looking like April, May, but they're certainly well underway, and we're using very good firms to do so. Hatch, very well known, particularly in Canada and North America, and very well known in the mining space in Australia. And so we're using their offices out of Toronto and Santiago, Chile, as part of the DFS. On the environmental social impact assessment, we're using Knight Piésold, and getting the export credit agencies in early. They can then opine on those studies, and if there's anything else they want to add, we can have that added now. And as I mentioned before, that then triggers the financing, which second quarter of the coming year, together with an offtake agreement. Entirely separately, we'll be running a demonstration plant on site. We have been running the pilot plant in California and will continue to do so. It feeds information in for the definitive feasibility study, but then the demonstration plant can produce minimum of 2.5 tons of product, so we can send half-ton samples off for the qualification process and off to off-takers so that they can see that this product continues to be very high quality at scale. Then indicatively, financial close, middle of next year, construction kicking off latter part of next year once approvals are in place, and then aiming for production in 2024. And that expansion case will probably be very soon after. As a matter of fact, we're taking some guidance from Ganfeng and their project to the north of us that we will probably give the team a bit of a holiday and then just build the second train and move to 50,000 tons pretty much as soon as possible after we commission the plant. Next slide, please. And the key benefit, apart from getting into production and apart from being a top 5 producer, there's a real benefit in being independent, and we have unallocated offtake at the moment. We did an analysis about 2.5, 3 weeks ago, and we counted 4 companies in the lithium development space that hadn't allocated their offtake yet. And I can tell you that's in particularly high demand when you consider the both quality benefits and ESG benefits. Further, in Argentina, there's been significant M&A activity, and we've seen most of the developed projects now taken off the table. To give you an example, when Volkswagen came out with their battery day in February, they talked about going upstream into the supply chain. And since that time, we've seen different companies out of China remove 9 lithium projects off the table globally. And that has certainly happened in Argentina as well, with the removal of Neolithium and Millennium. And so there's a real benefit in being an independent producer, and one that isn't directly tied with one particular party in the supply chain. That provides flexibility. We could take an example from Andrew Forrest setting up FMG when the iron ore was controlled by a triumvirate of Rio and Vale and BHP. Okay, it's not the same scale, but end users also want to see that independent producer, and we can deliver that at scale. 25,000 tons per annum was 8% of the market if we look at last year, but it's becoming increasingly small looking forward. That's why we're looking at 50,000 tons per annum. And if we can get another project up and running and be looking at 70 to 75,000 tons per annum production, that means we can become meaningful as the demand increases. Next slide, please. And as Tim mentioned before, that growth We're not sure if it's 8, 10, 18 times, but if we just look at the mega factories, it's at least 10 times last year's production, and I suspect that number is going to continue to grow. So that scalability and that independence in that scalability is important. Next slide, please. And so to that end, that's why you're going to hear more about our other projects, Cauchari, Oros, Paso. Different province, they're in Jujuy province. It hasn't been straightforward to get approvals to do all the work, but we're certainly well ahead of the pack, having been here now for 6 years. We drilled in 2019 and demonstrated brines the same as the Cauchari project. We reasonably expect during the Argentine summer to be doing more drilling at Cauchari, at Oros, and particularly characterizing those brines using direct lithium extraction, not just lilac, but a number of them, so we can look at what is the best way to optimize this. But naturally, our preference will be to develop these and just get going on the next project, because we've got the capital costs, we've got the operating costs, we've got, thanks to the PFS and the DFS, we've got a good idea of environmental issues, where in this case, there are solar PV farms already here. Okay, they may need to be augmented, but don't have to be built from scratch. So we could quite reasonably bring the next projects online quite quickly. Next slide, please. And to that end, if you look here at the blue, admittedly, it doesn't look as large as what's in grey or what's in yellow and blue, which are our two neighbours, Oro Cobre and the Ganfeng Lithium Americas JV. But as we've already demonstrated, as long as we have a reasonable resource to tap into, we only need the area the size of a city block to put our processing plant. We don't need 20 to 30 square kilometres of leases to put our evaporation ponds. And that's a key benefit as we develop these next projects. And the projects next to us, these are the largest ones around. Ganfeng is moving to 60,000 tonnes per annum of lithium carbonate production after they get into production next year at 40,000. So big projects. Next slide, please. And then our Oros project, we've got leases there in blue covering 30 kilometres north-south along the edge of the basin. If we wind back to 2016, people thought we were foolish to be applying for leases along the sides of these basins. Why would you do that? We came up with a new exploration model. We said, instead of these things looking like sources, so you have to be out in the middle to find the brines, we said they were more like swimming pools with straight sides. And we pegged these leases, and we've now demonstrated that exploration model works both here and undercover at Kachi. Next slide, please. Of course, you can't do all this unless you've got a solid board. 4 out of the 5 board members all speak Spanish, have worked in Argentina, Chile, and other countries. Our chairman is very experienced in the capital markets. Amalia, who we added recently, experienced energy, natural resources lawyer. Dr. Nick Lindsay has been working Chile, Argentina, Peru for more than 30 years. Fairly soon, we'll announce an expanded team on the ground. We've got good members here that have been with us now for 5 years. We're now adding to key senior members so that we can demonstrate to the market how we're going to deliver this into production. Next slide, please. But despite all of that, and despite the fact that Tim mentioned we've just gone through $1 a share, there's still significant upside. People have said, Steve, the share price has gone well. Yes, it has. But if we just look at our nearest peer, Standard Lithium, March last year, they were trading at 32 cents. Now they're above $12. So it is significant. They own 30% of their project. We've got 100%, albeit Lilac will be earning in, and we've got 3 other projects as well. So there's plenty of upside from here. Please don't think this is as far as it goes. There also seems to be a premium being paid for companies being involved in direct lithium extraction. If you look at Standard Lithium, Vulcan aren't as quite as advanced. They don't have their financing in place, whereas Standard Lithium do. But you can see that there's a real premium being paid for these more ESG-friendly sources of lithium production. Next slide, please. And so, in summary, we're going to be producing some of the world's highest purity lithium with a major ESG benefit. You can only do that using new technology, and we're going to become an independent, clean producer at meaningful scale in that top 5 producers going forward, even with the growth in the market. So thank you so much, and back to some more questions, Steve.
Thanks, Steve. We've got a few here. So with those potential new projects, will it be a similar source of funding, do you expect?
That would be reasonable to expect. Yes.
I understood that's a sensitive question. Now, in regard to offtake partners, what are some of the key factors that will influence your decisions in regards to who to partner with?
That is a very good question. Thank you. We have wanted to get tier one partnerships for some time because the wind is blowing at the back of lithium at the moment, but we have seen that there are times when it doesn't. We're not anticipating any retracing in pricing, and certainly not in the medium term, but having a solid partner means that as they grow, we can grow as well, and we can deliver more product that they already know into that burgeoning market. So finding a partner which is tier one, we have been having conversations which are tripartites with the electric vehicle maker and their preferred battery makers and cathode makers. And then that way you actually capture that. And then last of all, we're looking for a rise and fall pricing mechanism, which is still relatively new in offtake agreements, but we're starting to see a couple of announcements in the last couple of weeks that include those. I think that's important, where we look at a quarterly or a half yearly repricing matrix, both on the upside and the downside, so that we can ensure we can deliver the product that the end user wants.
And have those conversations changed over the last 18 months from you calling them to them calling you?
They have changed completely. This time last year, most conversations were as if you could go down to Bunnings in your pickup and just throw some lithium carbonate in the back and take it down to your plant. And we kept saying, look, the macro says there's going to be a problem, and if you don't invest in the upstream supply chain, the product just won't be there, and you won't be able to deliver the batteries for the vehicles that you're after. There has been a total change in that understanding in the last few months. And since certainly the start of this year, and particularly since March, the importance of that product being ESG friendly. The electric vehicle makers understand that. They know they need that. And slowly we're starting to see the cathode and the battery makers understand that as well. I would also add a call out to Lilac, now having them formally working with us. That's actually expanding our bandwidth into the North American market. So rather than just EU-based car makers and East Asia-based cathode and battery makers, that has expanded our bandwidth there. And so we're having some pretty interesting conversations. You could reasonably expect one announced prior to the DFS and one soon after.
And in regards to the DFS and the environmental study, what are some of the biggest risks that you could perceive prior to delivering those?
Mainly timing, I think, is the key thing. There are strains everywhere on personnel, on equipment, what have you. And so to that end, that's why we wanted to get the export credit agencies involved in the process as early as possible in case they wanted to see something added to it. So far, the DFSs and the ESIA are certainly on track. I don't anticipate too many issues there, but as soon as they are completed, our next job is actually pre-ordering long lead items. And let's say we were developing a gold project and there was a gold boom on. You might have difficulties in finding a ball mill, for example, and so you pay down a deposit for that. But we've seen from the electric vehicle makers that, you know, if you don't have the right semiconductors or maybe even USB ports, you can't get your cars out the door. So we're going to be quite granular and actually pre-ordering all sorts of little widgets so that we can actually deliver this project in the timeline that we're talking about, because the world needs this lithium now and over the next few years, and we want to be positioned to be able to deliver that with the right sort of alliances along that supply chain.
Right, Steve, that's all we have time for. Congratulations on becoming a billion-dollar company with Lake Resources. Obviously, sounds like there's more upside to go. So thanks for your time.
Thank you so much, and thanks for everybody who's dialed in. And please remember, you can always email me at Steve, S-T-E-V-E, at lakeresources.com.au, and we'll try to answer your questions. Cheers for now.
Expect some emails, Steve. Have a nice day. See you later.